Hello and welcome to another update video about the DXY. Yeah, probably the last DXY video of 2023. So we wanna talk about the structure here. So far, I mean, the forecast that I have laid out over the last few months is being followed nicely. Remember that we forecasted up here very early that potentially a top is in place. We could confirm that further along the way, but I started to lean towards it when we first broke out of this impulsive price channel here. Yeah, so it was very, very early and we never broke the high again. So I'm continuing to lean towards the idea that this C wave to the downside has indeed started, and it should take us into the low $90 region in 2024. Yeah, so that's still my perspective. Maybe for anybody who sort of has missed previous videos, like on the daily chart, the idea is, so let me go to the 4-day chart actually. There are a couple of scenarios I'm watching here on the DXY chart. So off the 2008 low, this could have been a 1, 2, wave 3, that this is a huge diagonal. Then this is now a wave 4, okay, which would be completed with this ABC structure that we just looked at. And then a wave 5 higher could take us obviously to new highs over the coming years. But it's also possible, and that would generate years of sideways price action, that this move down, and you won't see it very well because, you know, of all the labels, but that this move down that's currently unfolding is just an A wave. There will be a B wave rally, and then we come down in wave C, would decline further over the long run. Before, however, then in the very long run, further upside is possible. So generally tendency up, yeah. But I think there is a risk that we're going to see like years and years and years of boring sideways price action, okay? But the tendency is up, short-term down, however. And after this sort of target, which I currently have roughly at around the low $90 region, which also is in line with the parallel trend channel here, we should see some significant upside. Okay. The question is this going to be wave 5 of 1, or is it going to be a B wave? But we don't even need to deal with that question right now. Just want to give you an overview of the bigger picture. At the moment, the assumption is we're coming down in this wave C of wave 4. And I mean, depending on how this stretches out, I don't know if this is going to be enough, you know, low $90 region. Maybe it's even going to break below that trend line there. My primary scenario is still here the white structure, in which the price formed actually 5 waves down, but it's really time now for a retracement. Okay, I've slightly adjusted the resistance area, and it is possible that this wave 2 has started. To maintain this perspective, the price should really show us a bit of a retracement now. Again, the resistance or retracement area is defined. I should maybe add the 38.2 retracement level as well. They're just sort of the levels. I will take out that red line because that was just let's say a breakthrough point, further confirmation level for further downside into the direction of the low $90 region. But if we see a rally now, you know, it should take it into the region around $103 to $105, $106. That's pretty much in line with my analysis on the SPX chart, in which a B wave pullback is ideally also happening at some point, right? But I don't see the evidence that the wave 2 has started. I mean, early indication, yes. And that could be, also that could mean a substantial decline for the SPX. Not necessarily a crash. There is a pullback due. Before we then see further downside in 2024 here on the DXY. The resistance is, as I said, very well defined. But if we talk about, you know, downside pivots and targets for circle wave 1 here, which is just the first wave of that C wave, then, you know, we take the length of that wave 1, we go to the high of the wave 2, and we see how extended that 5th wave already is. I mean, it's significantly, it's even below the 2.618 extension. So that caused me to sit down really and take a look at alternative wave counts. And I want to share one with you that I think could be relevant, and it would just be a different but more direct subdivision I might highlight that in yellow actually, and my view would be that this was the wave 1, just because it ideally it reached perfectly that 2.618 extension. Then we had the wave 2 here at the high that was made on the 10th of December, and we're basically now coming down in wave 3, 4, 5. Just to show you, there is basically a pathway, a more aggressive pathway to the downside. Yeah. But even then, at least some kind of a pullback or corrective rally should unfold here. Bottom line is, against $105.87, the focus is on further downside. At the moment, I stick to this scenario, but it depends on how high the wave 2 now goes. But either way, I think this downtrend is, I'm still leaning towards it. I have been for the last few months. That also contributed likely to that rally on the SPX. And the question is, how substantial will that wave 2 be? So we have some levels to watch. Definitely some levels to watch. And but we haven't even taken out any previous swing high here. Next major structural resistance is sort of around $102.62. But yeah, basically just to message here and to mention everything's still going according to plan. We're getting quite extended to the downside there. And a corrective rally is due. Could start shortly, might have started already. So we have some resistances to watch here. And that could also lead to a pullback on the indices, including the SPX. Yeah, that's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our stocks and S&P 500 service. You'll find the link in the description. Have a great start to the new year. Bye-bye.